Okay, let's dive right in. When you think about finance, what's the real currency? I mean, beyond dollars or
It
euros.
has to be trust, right? Always has been.
Exactly. But it feels like right now that trust is under pressure. You've got all this digital disruption, changing regulations, just a lot of economic uncertainty swirling around.
And it's creating what some are calling a new crisis of trust in banking.
Yeah.
A lot of people feel uh, kind of disconnected, maybe even left behind by the system.
Yeah, alienated. Which brings us to our source material for this deep dive.
Right. We're looking at a really fascinating article by Dr. Pooyan Ghamari. He's described as a Swiss economist and the founder of the ALandPlatform. It just came out May 27th, 2025.
And he doesn't just describe the problem, he calls for a, quote, radical rethinking in banking.
hmm And his solution isn't just, throw more tech at it or add another layer of compliance rules.
No, it's more fundamental. So our mission today is to really unpack his argument. He's saying banks need to get back to basics.
Yeah.
Genuine engagement with customers, really transparent communication.
And crucially, this is the big one, a serious, systematic investment in financial literacy.
Which might sound a bit soft, like just be nicer.
Well, that's the interesting angle the article takes. It argues this isn't just about being altruistic or ethical, though it might be that too. It's framed as enlightened self-interest,
Enlightened self-interest, meaning,
meaning it's actually a smart business strategy, a way for banks to secure their own future, their own relevance in the economy. Doing good is doing well, essentially.
okay, so let's dig into that. Where does Dr. Gamari start? He highlights this problem of the financial literacy gap, right?
Yeah, and he stresses just how big this gap is. It's not some niche issue affecting a small group. Financial illiteracy is incredibly widespread.
He uses OECD data, I believe.
That's right, the Organization for Economic Cooperation and Development. Their data shows over half of adults, even in advanced economies, struggle with pretty basic financial concepts.
Things like
hmm
compound interest, how that works.
Exactly. Or, risk diversification, the whole don't put all your eggs in one basket idea applied to money. Or even just understanding how inflation eats away at your savings over time.
Simple concepts, but with huge implications if you don't grasp them.
Absolutely. And the article points out it's often even more stark in emerging markets, where access to formal financial education can be really limited.
And the source connects this lack of knowledge to real-world consequences, doesn't it?
It does. It talks about people making suboptimal decisions day in, day out, maybe overpaying for credit cards or loans because they don't understand the interest rates.
Or missing out on ways to make their savings grow because the options seem too complex.
Or worse, falling victim to financial scams because they can't spot the red flags. It's heartbreaking, really.
And Gamari argues this isn't just an individual tragedy, it has broader effects.
Right. He connects this knowledge gap directly to worsening economic inequality. It acts as a brake on overall economic growth. And, crucially, it feeds back into that cycle of distrust we mentioned earlier. People feel alienated, maybe even cheated, and they disengage.
So it's a massive challenge, but he also frames it as an opportunity for banks.
Precisely. An opportunity to step up, bridge that gap, and rebuild trust in the process.
Which leads us neatly into the first pillar of his proposed solution, making financial literacy a cornerstone of banking.
Yeah, he argues investing in customer education isn't just the ethical thing to do, it's fundamentally strategic. Good for the banks, bottom line.
How so? Why is an educated customer better for the bank?
Well, the logic is pretty clear in the article. Informed customers, they understand financial products better. They're less likely to default on loans because they grasp the terms and their responsibilities.
Makes sense.
They're also more likely to actually adopt new products, maybe slightly more complex ones like investments or insurance,
Yeah.
because they feel more confident.
So higher engagement.
Right. They're also potentially more resilient during economic shocks. And the article suggests they tend to become more profitable and, importantly, more loyal customers over the long haul.
So the argument is banks need to embed this education deep into their operations, going way beyond just, ticking a regulatory box.
Exactly. It needs to be part of the fundamental customer experience. And he gets practical about what that looks like.
Like what? What kind of actions?
Things like developing really clear, interactive, jargon-free tutorials right when you first open an account. That onboarding process is key. Make it welcoming, not intimidating.
Okay, what else?
Offering workshops and seminars, but not just generic ones. Tailored sessions for different groups, students, retirees, small business owners, maybe held in branches, maybe online, maybe even out in community centers.
Meeting people where they are.
Yeah. And I like the mention of gamified financial literacy apps, using mobile tech to make learning about finance maybe even a bit engaging, a bit fun, rewarding people as they learn.
That could work. And resources, too.
Absolutely. Comprehensive resource centers, easily searchable online libraries, maybe a dedicated helpline for financial questions, support networks. But the key, the article stresses, is empathy.
Empathy. How does that fit in?
It means really trying to understand people's actual financial worries and goals, not just pushing products, addressing their anxieties, supporting their aspirations. That builds real connection.
Okay, so education is pillar one. What's next? The source talks about community outreach, right? Rebuilding relationships that way.
Yes, because we've all seen this huge shift to digital banking. It's efficient, no doubt about it. But the article argues it's often weakened those human connections.
You mean branch closures, endless phone menus, trying to get help from a chatbot?
Exactly. It can make banking feel very impersonal, transactional. You feel like an account number, not a person.
Been there.
So the source argues that rebuilding trust means banks need to consciously show up, both physically and emotionally, in the communities they serve. Outreach isn't just a branding exercise. It's about weaving the bank back into the social fabric.
And it has to be genuine.
Totally. The article calls for authentic outreach. It needs to be a dialogue, not a monologue. Banks need to listen as much as they talk, understand local needs, maybe even co-create solutions with the community.
What would that look like in practice?
Well, the source gives examples like holding regular listening sessions, just genuinely asking residents and local businesses, what do you need? What are your challenges?
Or offering things like free financial health clinics, unbiased advice without a sales pitch.
Exactly.
Yeah.
Partnering with trusted local organizations, schools, nonprofits, maybe even places of worship to deliver financial education or support. Leverage existing community trust.
That makes sense.
And another interesting idea, having dedicated crisis response teams. So when there's an economic shock like a pandemic or a local disaster, the bank is there quickly with practical help and guidance.
That would build a lot of goodwill.
For sure. And the article makes a crucial point. Measure success not just by how many events you hold, but by the actual outcomes. Is financial well-being improving in the community? Are people feeling more secure? Is satisfaction going up? Track the real impact.
Okay, education, community outreach. And then there's the third pillar, which feels almost counterintuitive today, local agent networks. Using people as a bridge.
Yeah, it's a fascinating point. The argument is that even as finance goes digital, maybe because finance is going digital, the need for trusted human intermediaries is actually growing.
Why?
Especially, the article notes, in areas where digital access isn't universal or where there's maybe historical skepticism towards big, centralized institutions, people trust people they know.
So who are these agents?
They could be anyone embedded in the community, maybe local shopkeepers, community leaders, dedicated bank representatives who are physically present. They act as translators, educators, problem solvers, advocates.
The source mentions agent banking in emerging markets as a key example.
Yes, a powerful one. Think mobile money kiosks in small stores, or using post offices as banking points. These local trusted spots become extensions of the bank, bringing services to people who were completely excluded before. It's been revolutionary in many places.
But the article says this isn't just for emerging markets.
No, the logic applies in developed economies too. Agents could be outreach ambassadors in specific neighborhoods, language liaisons for immigrant communities, cultural navigators helping the bank understand different needs.
So how do banks build these networks effectively? The source gives some best practices.
It does. First, recruitment. Find agents from the community itself, people who already have local knowledge and trust.
Okay, then.
Training. Crucial. Not just technical product knowledge, but strong customer service skills, empathy training, ongoing learning. They need to be advisors, not just salespeople.
They need real power too, right?
Empowerment, yes.
Yeah.
Give them the authority and the tools to actually resolve customer issues right then and there. Cut through the bureaucracy. Make them effective problem solvers.
And how do you keep them motivated?
Incentivization. Design fair pay structures that reward not just transactions, but building those strong long-term relationships. Reward the trust they build.
So the takeaway is, these agent networks aren't fighting against digital transformation.
Not at all. The article positions them as a vital complement to digital, making sure technology serves everyone and doesn't leave people behind. It's about the human touch alongside the high tech.
Right. Now let's address the elephant in the room. A bank executive might hear all this education programs, community centers, human agents, and think, This sounds expensive. Why divert resources in such a competitive market?
And the source tackles that head on. The answer, it says, is increasingly backed by research. Trust isn't just a fluffy feeling, it's a powerful force multiplier. It directly boosts the bottom line.
Okay, how? Spell it out.
Well, first, customer retention. Simple enough. People stick with banks they trust. Lower churn means lower costs acquiring new customers.
Makes sense. What else?
Increased cross-selling. When customers are financially literate and trust the bank, they're more open to using a wider range of services, investments, insurance, mortgages. They understand the value and feel confident.
So deeper relationships mean more business.
Exactly. Then there's risk reduction. Educated customers make better borrowing decisions, leading to lower default rates. And operating transparently, building trust, helps banks avoid huge regulatory fines and reputational damage.
That can be massive.
Huge. And finally, brand equity. In today's world of instant online reviews and social media, a reputation for being trustworthy and genuinely helpful is an incredibly valuable asset. It attracts customers and talent.
So the core message is pretty stark then. Investing in literacy and community isn't just the right thing to do.
It's the smart thing to do. It's presented as a strategic imperative for long-term success and resilience.
So how do banks actually start doing this? Does the article offer a kind of roadmap?
It does provide a sort of blueprint for action, and it starts, unsurprisingly, at the top. Leadership commitment.
Meaning it can't just be a pet project in one department.
Exactly. It needs to be a core strategic priority, driven from the C-suite. It needs to be embedded in how performance is measured. KPIs, allocated serious resources, and linked to incentives, even for senior managers.
What else is in the blueprint?
Embedding literacy into product design itself. Make products easier to understand from the start. Be transparent about fees, risks, benefits. Put it in plain language, upfront, not buried in the fine print.
Build trust by being clear from day one.
Right. And acknowledging that banks can't do this alone. The source stresses building partnership ecosystems.
So teaming up.
Yeah, joining forces with schools, universities, maybe fintech companies that are good at engagement, government agencies. Leverage open banking tools, those secure data connections, to make collaboration easier. Share the load, extend the reach.
And finally, they need to know if it's actually working.
Critically important. Data-driven impact measurement. Banks need to rigorously track the results. Our customer behaviors changing, our community financial health metrics improving, our trust levels rising. It has to be a continuous cycle. Measure, learn, refine, improve, prove the value.
The article also emphasizes that this isn't just a challenge for, say, U.S. or European banks.
No, it frames it as a global context. This need to make finance more empowering, less intimidating is universal.
And Dr. Ghamari's background with the ALandPlatform gives him that global view.
Exactly. The platform works across real estate, economic development, investment globally. So he's seeing firsthand how improving financial literacy and engagement can genuinely transform not just individual lives, but entire markets.
Which leads to the article's really powerful concluding thought. This isn't just about tweaking banking.
No, it's positioned as a fundamental redefinition of banking's purpose, moving beyond simply facilitating transactions.
To actually helping transform lives and communities.
That's the vision. The future, according to Dr. Ghamari, belongs to those banks that fully embrace transparency, prioritize education, and actively cultivate trust. Banks that become seen as real partners, guides, educators, advocates.
So the argument is the last decade was about tech and efficiency.
And the next decade will be defined by trust, literacy, and authentic human connection. That's the core thesis.
Wow. Okay, so just to quickly summarize the key takeaway from Dr. Ghamari's piece, this idea of rebuilding trust through serious investment in financial literacy, deep community ties, and that vital human touch. It's not just optional corporate social responsibility.
No, it's presented as absolutely essential for banks to thrive, maybe even survive, in the future, and arguably to fulfill a more meaningful role in society.
So maybe a final thought for everyone listening, take a second and think about your own bank, your relationship with them.
Yeah, does it feel like they're that trusted partner the article describes? An educator, a guide? Or is it mostly just transactional?
And maybe ask yourself, what does this vision banking as a force for transformation? What could that mean for your own financial journey? What role would you want your bank to play?
Definitely some food for thought. Something to mull over.